Greetings everyone, welcome aboard. Joseph James, SchoolOfTrade.com, June 22nd, 2010. Here's your live trading recap. Before we talk about the trades we took today and get prepped for tomorrow, I want to remind you guys about our blog. There's a link to our blog right below the video, guys. Follow that link while you're there. Don't forget, subscribe to the blog, follow the blog, that we always get all the new stuff, right? Use that search box in the upper right-hand corner to look for different terms you have more questions about. Follow us on Twitter and Facebook, guys. All the social media pages are right there on the blog as well. And let's see here. We took 10 total trades today. 120 ticks, 1,200 USD. That brings our weekly total to 1875. Our monthly total now, guys, 14,000 for the month. Boy, I thought the month of May was great. The month of June is on pace to be even bigger, guys. And now we're over 65,000 here for the year so far. So we're in the 6th month, and we've got 65,000 bucks. That means we're averaging over $10,000 a month in the live trade room, live trade calls in real time. All right, guys, come out. Make sure you guys come out and join us. And don't be afraid to ask questions about, want a copy of the track record, you can get that on the blog. Email us. We'll send you guys a copy of the track record. What's the most important thing that happened today? Well, of course, we had the FOMC meeting started today. Now, tomorrow is Fed Day, so we expected this to be a little bit slow. Now, why do we expect Fed Day to be a little bit slow? Because tomorrow at 2:15, they're going to release their announcement. And the announcement usually has a lot of real key components in that announcement about what they were seeing, what their concerns are, some good things, some bad things, and usually the Fed Day results in some sort of interest rate change. Okay, the Federal Reserve, right, their Fed funds rate. Last time, though, they left it unchanged. This time, though, they may be raising it. They may be dropping it. You never know. So today, because the meeting gets started today, a lot of people are expected to be sitting on their hands, right, waiting for tomorrow at 2:15 to figure out what the FOMC announcement is going to be. All right, so that's why the Fed Day tomorrow is going to affect us today, because they're waiting for tomorrow to see what's going to happen. We also had Tiny Tim Geithner today, our secretary, our Treasury Secretary today. Big Tiny Tim speaking at 10 o'clock this morning. So he was speaking about TARP funds today here in the U.S. That really slowed things down, and we had to wait really till about 11 o'clock. At 11 o'clock, we saw some great price action. Let's start first, though, with the dollar. We always start with our dollar, the symbol DX. Now, of course, guys, come into our live trade and we'll talk all about the dollar. And, guys, what you can see here is this is my slower time frame first, right? So here's my slow chart on the dollar. And what do you see? I see a downward trend. But this is a little bit misleading because look at this area right here. This doesn't look to be trending down, does it? Guys, I really don't pay attention to everything that happened in the past, right? The downward trend doesn't mean anything if I'm going sideways. Now, we always start with the dollar, and we always start with our slower time frame. What would be an easy way for me to find out if we're really going sideways? Because that's going to give me a heads up for the rest of the market, right? The fast time frame. That's exactly what I'll use. I'll use my fast time frame. So let's go from a 34 range or a 30 minute, right? Something like that. Let's now zoom into a 5 minute, right? Let's zoom into a 4 range or an 8 range or a 12 range. And now what do we see? We see a sideways market, right? You can see at the open here, sideways. Right, double tops, double bottoms, above the open there, it's all sideways. So we look at the slower time frame. The slower time frame tells us trending down, but we want to confirm that. Zoom in on the fast time frame. The fast time frame shows us we've got a flat trigger line. We're going double tops, double bottoms. Now, what does this tell us? The dollar index now tells us the rest of the markets will be expected to be sideways. Now, if we saw a strong downtrend, I would expect the rest of the markets to be rising. Strong uptrend of the dollar, market's going to be falling, right? Negative correlation. Go to the blog and search for dollar index correlation, and you'll see all kinds of great articles and videos we've done on the dollar index itself. All right, guys, let's get started. First couple trades were on crude. We then went to gold, then back to crude. As you can see, only gold and crude today. We took breakers, we took 2 steps, but we got the day started with a first trade loss. Now, we don't like to do this, obviously. We don't purposely do this, but short-term trend was up. We're going to bounce off the high of day, and like we always look for, we're looking for a reversal. Now, I made a mental mistake on this one, guys. See this green trend line here? This is a good example of what you need to do or what to avoid. I took this trade without placing that trend line. And you can see what happened. We bounced off the high. There's our swing low. We break below that swing low. And then, ouch, right, bounces off that trend line. So the trend line holds, bounces up, and then comes right back down. So this is a tough spot. This is a tough spot. Should have definitely stayed away from this trade. But what did I learn? This reminded me, always get your charts done first, right? We were doing our morning prep, dollar, euro, gold, and then finally on crude, I was about 10 seconds behind it. And of course, I tried to force the trade. I got too aggressive, didn't follow my rules. My rules always tell me, get your charts done first. Now, as you can see here, the better trade would have been was to skip this trade because you had that trend line right in our way right here, right? I gave back 4 ticks, got out for a -1. Times 4 is 4 ticks. So we got out, of course. We saw our first target almost tested, and then it bounced back up. We saw big buyers in the tape, and we knew right there I had made a mistake, cut the trade early, and get out of it for a small loss. Now, what we should have done is we should have grabbed the second move, right? The second trade here on the upper right-hand corner, that's going to be your better pattern. Because you can see here what happens is we now come up, we're going to break below this trend line here, and then we have this clear sailing to the downside. Right? We didn't have that open down, right? That open area to the downside for the first trade, right? Because we had that trend line there. For the second opportunity here in the upper right-hand corner, right? That would have been a much better idea. Wait for it to come back, get truly below that trend line, and then look, of course, for the 2-step short. That's okay though. We learned a lesson here. Get your chart set up properly first, and then go from there. All right. So at 9 o'clock. We gave back $40 to the market that we made yesterday. Now, as you can see here, guys, we had a big day today, so we made all that money back pretty quickly. 9:47 now. Fast forward after the 9:30 open. We're going to come back, test the high of day again. Now, guys, you should know by now, right? We see the high of day tested. What do? We mark up our swing low. Make sure we have no trend lines in our way, right? Make sure the trigger line is above us for a short trade, right? I want to make sure I have all this room to the downside to let this trade run. 63 was the fill at 9:47. We took 2 off at 4. 2 off at 2. As you can see, what happened was came down, filled our first target, then ratcheted back up, bounced us out, and then came back down over. This was something we saw all day today, guys. It really looked like today that people were really very concerned about the overall direction. We didn't see any real big strong moves until about 11 o'clock today. So the first hour, 2 hours of the day today were really very challenging, right? From 9 o'clock to 11 o'clock, we really didn't see a lot of big moves here. We got enough to get us into trade, and then, of course, thank God our trade management strategy, move our stop down to entry. As you can see, stop me at point of entry, right? But then it rolls over. So this just shows that inconsistency we saw from yesterday as well. The good news is, though, is our trade management strategy is in place to protect us in case the markets happen like this. So at 63 here, guys, at 9:47, we took $120 out of the market, 12 ticks, 2 off at 4, 2 off at 2. Right? 8 plus 4 is 12. So made the money right back on the reversal off the highs here. And then, of course, we keep coming down. We break below support here at 78.53. We mark up our swing low. We break below that swing low. And this one now, of course, got our plus 4 target filled, 2 off at 4. Got our second target filled, 1 off at 8. And then got, as you can see here, came right back up. Right there is where I got bounced out. Right? So in at 45, out at 44. Okay, guys, so again, the markets are real choppy at this point. Okay, here's the move. We took our 2 off at 4, 1 off at 8, 1 off at, of course, -1 right there, right when it came back up and clipped me out. And then, of course, you can see it came right back down. So a little bit frustrating there, right? We had a couple opportunities here to grab some real big winners, but just happened to get the, kind of an unlucky bounce this morning. Now, I'm not going to complain, obviously, with 120 ticks in our pocket this afternoon. But at the same time, though, let this be a real strong example of how sometimes the markets are just going to be real whippy like this. They're going to be challenging like this. The key is follow your rules, keep trading your patterns, and guys, I promise you, as we saw today, you will end up on top. All right, let's keep moving. So we took another $170 out of that, guys. So $120, add another $170. Let's keep moving. Let's keep moving. We're still on crude here now at 10:47 on crude. Now, of course, we had to go through the 10 o'clock news announcement. We also then began to see Tim Geithner speaking at 10 o'clock. So things began to slow down here, guys, after that 10 o'clock news. 10:47 on crude. We're now looking again for reversal pattern. Short-term trend up. We're going to bounce off all this resistance overhead. Doesn't need to be the high of day, guys. It's just a little bit, right? All we need is that overhead resistance. Mark up your swing low. Make sure you get below that trigger line here. Get below the trigger line. There's going to be your two-step reversal. Okay, so two-step short, 78.20, 2 off at 4, 2 off at 1. That's 10 ticks or 100 USD. Right? It's 100 USD. All right, guys. It's a reversal off the high there. Now, not the high of day, off a level of resistance. Well, as you can see, though, that didn't last very long. The price quickly there reversed. short-term trend went back to its upward trend here.